Confluence study, CL, which is oil futures, spanning 3 days on a 15-minute time frame. Well, here we have 1, 2, 3, 4 touches, and we note we hold down here. This is difficult to draw the trend channel, as ideally we would like, say this 50%, we would like a touch here, but as we break here, we would draw the parallel in. Now, just for disclosure, I would have drawn the level in from here, okay, as it contains price. However, I noted later on that we get 6-7 touches at this level here, so I adjusted it from the low. Now, it doesn't really the reason why I deleted the original line was because it just made the chart a bit messy. So we find support here, rally up, and what do we note here? We have a reverse use of trend line. Demand is entering earlier. The market is unable to fall further, so unsurprising, we hold and trade sideways. Then we push up, come back down, resistance holds. Now we have faith in our channel. Now I'm ready to start using edges for trade setups. This validates the level nicely. We've got 1, 2, 3, 4, 5, 6, 7. If we draw it in from here, 7 touches, and enough time has passed from here to here, and that holds. This tells us, yes, this is a good channel. We react down, come back down. This support holds. Rally back up. Boom. Confluence at 1. There is weakness in a supply area. We've got the supply line from our channel and this local level of resistance. The close is here, and then we have 2 no demand bars, which we will go into depth. So this is a trading opportunity. No demand bars mean there's no demand left in the market, and if there's no demand left in the market and we're in an area of supply, well, not just an area of supply, we have a supply confluence, they become very powerful bar indicators, as in price action indicators for us to enter. They become very good entry bars. And if we take the trade, this would be our first kind of obstacle to overcome. However, note the price action as we break this level, which what validates, so this is good selling. As we know, we become slightly violated here, so our main target would be here. So we weaken, come back up, come back down. What do we notice here? We hold just above the demand line. So demand is entering. This tells us, perhaps demand is entering early. We can draw a little mini channel like this, and boom, yes, demand has entered the market. However, there's no upside follow through. We come back down, potentially hold a high low here, and then we get good demand enter, and we hold. Price holds from here. We go sideways. This is called holding gains. We are unable to react from this good buying, and then we get this strong bar. So this closes firm here, and we're near our supply confluence, would be short. No, we can't sell here because we weaken. Now we can't touch the demand line. Then we see good demand, then we hold a higher low, then we see more good buying, and we hold sideways, unable to react. This tells us there's no supply in the market, and then we push up with this strong bar very close to our resistance area, and then we get this little bar that closes under. It's very, very, very difficult to take a trade here, and as we come down, it's still very hard. There's no selling of any good quality here, and then you can't get up because it's there's too much time has passed. There's 15-minute bars. So for all intents and purposes, we cannot take this trade at 2, even though this produces a move, there's no logical reason to sell here. We want to see weakness. Yes, we are in a downtrend, and we are at a triple supply confluence. We've got the supply line, we have this local level here, and we have this level here. So that's 3 lots of areas on the chart where supply can emerge. But it didn't really emerge. We come, as I've said, we come from strength and buying and this buying. So just because we're in a triple, we're in a downtrend at a triple supply confluence, we don't sell blindly. We still need reasons in terms of price action to enter. Here we are gambling that it's going to hold, whereas say 3, look at what happens here with 3. We come up here, so this is this bar, and then we come up and we have negativity followed by negativity, these 3 bars here, and we cleanly upthrust this validated resistance level. Got 1, 2, 3, 4, 5, and look at the move. We come down, that's 6 touches, and we have a supply line, and behind us we have made a lower low under here. So for all those reasons, we still have continuation to the downside, and we get negativity. Yes, this is a fairly good move up, but these 2 bars, this bar closes above the supply line, but then we get instant. These 2 bars negate this strength instantly. Why? Because we are in an area or a supply confluence. We are in an area of supply where supply selling emerges. So we can sell, we can short this bar. The close of that bar we can take. So this works. Here we're gambling. There are no clean touches. It's hard. It's very difficult to enter here. And the fact we put in this lower low is a very good sign, because here we're holding higher with areas of demand. With all the strength, this is completely different. So using the background of strength here, and then this additional sign of weakness along with a price action, this is not gambling. This, you're taking a trade because it's likely to hold. That's not savvy trading. If we take the short from here, this would be our first target, this being our main target, because this is where our demand line, where buying should enter. However, if you see this coming down like this, which is straight down, you may want to negate this and just be nimble and make your play for here. That's still our main target. Okay, so let me summarize this chart. The main point being is that we don't take trades blindly just because it's a confluence area. If this second bar, say that's the first bar and this is the second bar that closes back under, if the second bar popped up to here, then reverse to close firm, yes, price action has violated the triple confluence before reversing and closing weak. Yes, we're more prone, we still have all this strength behind us, but we're more prone to take the short here because of the price action validates the supply confluence. Supply is emerging where supply should do. We're much more likely to execute. Even though we didn't get this trade, we still have 2 excellent trades in 3 days. And in an ideal world, we look for imperfection. What do I mean by that? We like to see the violations because it gives us an opportunity to enter where 2 doesn't. Good. Are there any questions? How do you know that the bar after the widespread up bar is good demand? Widespread up bar. This is the widespread up bar, yep. So the bar after is good. This bar. How do I know? Okay, it's a good question. How do I know that's good demand? Well, due to structure. Can you see what this bar does? What it achieves? First of all, from price action alone, it's a good wide spread. So that means demand is coming into the market. Okay, but how do I know it's good demand? You can draw this in. Add a parallel. So yes, this is a violation, but it's contained within. So there's 1, 2, 3, 4, 5, 6 touches, and 1, 2, 3, 4, 5. So we've got 6 touches to the supply line, and 1, 2, 3, 4, 5 touches on the demand line. So that is a working, validated channel. And as we break through, I'm try and draw it the best I can. So as we break through and close firm, what do we achieve? We break the supply line from this mini downtrend, channel. So now we know this is good demand, apart from just the price action alone of it being a wide spread. This also helps us understand why the market stopped here. Why? Because we're oversold. Isn't it fascinating? So this tells us alone that the market is, we're going to test somewhere up here, because we're holding a high low, we drive up, then we hold these gains, which is another reason why you wouldn't want to short here, because it's a strength. But I can't. The purpose of this study is that we're studying confluences. I mean, there is many channels and levels and horizontal support and resistance. I would draw it over this chart, but for the purpose of confluences, I didn't add, this little channel in, and etc. But a very good question. Yep, that does help. Excellent. No problem. Can you go through when you would draw the lines in apart from the main channel? Okay, so this trend channel here, as we break the lows. As we break the lows here, and we note we've got 3 touches, we draw this line. As we draw that level in, as we start rallying up or past here, as we can see we're going higher, we draw this level in. As price pops its head above and closes weak on here, we'd have to draw that level in. That becomes a local resistance. You could also draw it in here, either or. Come down, we push up. As we come back down to here, this level will be drawn. We come down here, we rally. As we rally, I mean, here is when you'd ideally draw in this support, but when it gets about here, this becomes significant because we've got these 2 touches. So this will be drawn. As we break here, this level will be drawn. And as we rally up and we hold for 1, 2, 3, 4, 5 touches, we would be in from the 3rd touch. I'll draw this level in. There are no further questions. On to the next subsection.